Did any of your non-crypto contacts ask you about crypto and about Bitcoin in the last month? That's what I was asking in the community poll several times over the last months. Let's have a look at the results relative to the Bitcoin price. Because timing the market to a degree is a psychological game. So I asked 5 months ago, 1/3 or 29% of you said yes, somebody that's not really related to crypto suddenly asked me about it. Then I asked the following month, it was only 21%. Then it fell to 18% and now to 15%. So here indicated via those vertical lines, we can see when the poll started. And the results are not necessarily surprising. When Bitcoin goes up, then everybody gets excited. People that are not in crypto ask their contact about it. But when crypto isn't rising, then the interest from outside also tends to fall. So you don't necessarily need falling prices for the outside interest to fall. We simply just need to go sideways. Now let's have a look how we can potentially use this to time the market. Let's have a look at the attention on crypto as a whole relative to prices. One very popular way to gauge attention is to look at the search volume, is to look at Google Trends. So have a look at this. This is a search volume for the term Bitcoin over the last 5 years. And there seems to be some kind of correlation, right? When we are very high, for example, here in May of 2021, then the Bitcoin price tends to be pretty high as well. When then subsequently interest goes down, there aren't too many new joiners, thus the price also tends to decline. Now this is a search volume for Bitcoin. Over here, we've got the search volume for crypto. And what's interesting is that it looks like the crypto search volume is a bit less volatile compared to the Bitcoin search volume. So again, we've got our peak in May of 2021, but we've also got a way cleaner peak in March of this year, right? There's way more volatility for the search term Bitcoin compared to the search term crypto. Now let's have a look at what happens when we are already relatively low in the search volume. So let's say we compare the beginning of July of 2022 to the middle of October, and let's then compare this to the peak again in March of 2024. What we've got over here is the market cap of all of crypto. And it looks like when interest is low, prices are low. So when the search volume doesn't go down that much anymore, prices also tend to be somewhat stable. When then search volume picks up again, we also see prices suddenly shooting up, right? This is a 150% rally. Now, I am personally finding those results very interesting. I did not expect that crypto prices can hold relatively high when there's no new people coming in. I thought there's constant sell pressure by, for example, venture capitalists or by teams that are selling off their allocations. And so seeing that the cryptocurrency market cap is going mainly sideways when search volume is flat, and that it's not going down because of constant selling by insiders, that's, I think, pretty positive. So it looks like there's some kind of a step function here, right? At the beginning, we've got very little attention, then prices might climb to a degree, everybody gets super excited about it, and then a fraction of the people that bought during the hype, they will take profit, they will sell, but not all of them. And because of that, we tend to see higher lows over the years, but also because of that, we do see our crashes, right? A fraction of the newly onboarded people are going to sell, but again, not all of them. So attention goes down, prices go down as well, but they don't go down as much compared to prior lows, even though the search volume is comparable to prior lows. Right, let's have a look at this. Here at the beginning of 2021, we had 23 in terms of search volume. That was over here on this chart. And then again, we had 23 in terms of search volume in August of 2022, which was over here. So a price increase of 23%. It's not a super obvious effect, but still, this is only 1.5 years. If we look at a more recent data point with 23 search volume in August of this year, we see that the crypto market cap grew by 140% almost. The main problem with crypto YouTube is conflict of interest. Too many YouTubers shill garbage, promote garbage, and fill up their pockets in the background. Not this channel. Instead, there's simply the offer where I share my skills, my perspectives to you, and where I also share direct access to me, where you can ask me any questions. Feel free to check it out. The premium membership link is down below. So it seems like there are two effects over here. There are in general the waves, right? Simply just created by the attention. Prices go up when a lot of people come in. prices go down when a lot of people exit. But the second effect is that the exiting tends to be smaller than the entering, thus creating a long-term increasing trend. So the price goes up over the years while the search volume can still stay somewhat flat. Again, because not everybody sells during a bear market. Now here's another way to time those waves. This is the stablecoin market cap. I look at this in multiple videos on this channel. And the reason why I like this so much is because it's a chart with relatively low volatility. When there's not a lot of money flowing into crypto or when the stablecoin market cap is going down, so here from May of 2022 to October of 2023, we also do not necessarily see rising crypto prices, right? This was a drop of 40%. But when then money flows into crypto again, the stablecoin market cap expands, that's when crypto prices can accelerate again. And so that's a problem with metrics like this, right? The search volume or the requests by people that normally are not in crypto. The issue is that those outsiders tend to come in late. With the stablecoin market cap, we figured already within October that it's time to buy again, latest by November. But the search volumes around that time didn't yet pick up. It took until March until Joe Schmo got interested. And by that time, prices already peaked. And so I find polls like this are useful to determine potential tops. They're not necessarily that useful to determine bottoms. I believe it makes sense to buy when the first courageous people are buying, when money is flowing into crypto again. It does not make sense to buy when everybody else is talking about it. It makes sense to sell when everybody's asking you about crypto. So it's hard to say, just based on social metrics, at what point in time it makes sense to pick up the bottom, simply because the masses wake up too late. It makes more sense to follow capital flows. Now the stablecoin market cap shows us the flow from traditional finance to crypto, but there's also a flow within crypto that impacts the prices, and that's simply how many stablecoins get converted into risk on assets and vice versa, right? What's the flow within crypto from stables to crypto and back? And so instead of looking at the stablecoin market cap, we can also look at the stablecoin dominance. How much of all of crypto is in stablecoins? And this is a very nice measure. When this peaked in November of 2022, the Bitcoin price was at the absolute depression. And when this bottomed in the middle of March of 2024, that's when the Bitcoin price was at the absolute peak. And so the stablecoin dominance can give us some kind of a gauge how risk off people are. When we are close to 19% of all of cryptocurrencies market cap being in stables, people are very risk off and it makes sense to buy. When does it make sense to sell? Or how can we identify the top? It's not that easy with this chart, with the stablecoin market cap. But again, that's why we've got social metrics. And that's why we look at on-chain metrics as well, right? I like to look, for example, at the value days destroyed metric, VDD. Feel free to check that out. Just search for this in Google, VDD, value days destroyed Bitcoin. That tends to peak very nicely with Bitcoin's price peaks as well. So tops and bottoms are not created equally. Tops are created by too much euphoria. Bottoms are created by less sell pressure and by the first people dibbling into crypto again, potentially dollar cost averaging into Bitcoin again. And that's then when we see the stablecoin market cap not decreasing anymore. Right now, it's slowly increasing again, but the market as a whole is rather cautious, right? The stablecoin market cap continues to increase and Bitcoin dominance is doing the same. Risk appetite is low. People simply just want to park their money and be prepared for a potential next bull run. But it clearly doesn't look like we are at maximum depressed price levels just yet. The stablecoin dominance is currently at 8% and the peak was at 19. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. In case you've got Telegram, then feel free to join us. The link is down below. Looking very much forward to chatting with you.